Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 29th, 2025. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Today is a big day. Fed day is on deck here. We have the Fed interest rate decision later on this afternoon and the Fed statement, and perhaps even more importantly, the Fed press conference that follows. We also have big-time earnings coming out here today from Microsoft, Meta, and Tesla after the closing bell. So a big day here for stocks and the broader market at large. If we take a look here at the ES in the daily time frame, you can see the previous session held the Monday midpoint and kind of bounced into the close, especially behind the strength of Nvidia. Nvidia with a massive bounce back day in the previous session after Monday's major losses, jumped back 8% plus the very next day here, and that has led to a lot of reactionary rubber band type of bounce back opportunities in a ton of stocks here. We detailed a lot of those in our afternoon session yesterday in the trading room, with a lot of bounce back opportunities that could be in play for multiple different markets and industry groups. Right now what we're seeing is a little bit of a holding pattern here for the ES. We're seeing a narrow range of price action ahead of the RTH Open, just 40% of ADR right now and 32.75 points of range. The early test at two-day highs has been defended, rejected here early in overnight and pre-market trading, and we're seeing a little bit of a fade after the previous session's trend day up. This could be kind of a holding pattern, range-bound holding pattern here ahead of this afternoon's Fed. And then in the final 2 hours of the day, we could see quite a bit of volatility enter the market. So that's going to be something that we're going to want to keep an eye on later on this afternoon with the Fed on deck. Continue to watch two-day highs here, the previous session's high. Failure to get through that level, and you're opening up a return here back to the previous session's midpoint of 60.64.5. We're taking a look here at the NQ. Similar price action here to the NQ. You can see the bounce back day that we saw in the previous session here, especially after Monday's massive tumble. This market here holding the previous month's close price, the previous session's midpoint, and bouncing into the close. A steady continuation again on the heels of Nvidia's strength. Right now we are seeing a little bit of a reaction here of prices above the previous session's high. Bit of a box reversal developing above that high and giving up those prices right now. We could be looking at a little bit of a pullback and a fill back into the previous session's range early, but given the strength that we've seen, higher value relationship, a bullish bias on the close, morning weakness could be defended for a push and a rotation back up. But again, a lot of that price action likely comes out in the last 2 hours of the day once the Fed announces their rate decision, provides the statement and the press conference that follows. Looking at crude oil. Crude oil yesterday, we were looking for a strong high to develop at 74s and perhaps another rotation down, and we saw that play out. Right here, that's the 74s right here. We see that thing put in a strong high. It dropped to lows on the day at 73 and then rallied into the end of the day. A little bit of a bounce there, where it was unable to get a new low. That created an inside day for crude oil. And right now we're seeing a double inside day develop with a perfect tweezer bottom on the lows here. So yesterday's low is precisely today's low. Tweezer bottom as it holds in a two-day compression at these lows. And that's providing quite a bit of energy right now. Quite a bit of energy. Of course, the overall downtrend remains firmly in effect here, and a takeout of that 73 support zone opens up more weakness to flush out the year's gains. But if this thing can start to push through 74.50, it really starts to open up some of the upside, and we could finally see a bounce back up ahead. So right now, building some energy right here is crude oil. It's definitely been giving it up quite a bit. You can see the 8-period average rolling over and providing resistance right now. So it's going to need a transition through that 8 period to really open things up back towards 78. Otherwise, we're still rotating downward until we find a strong low. So a 3-day buildup of energy right now below 73s opens up more weakness. Above 74.5 breaks the current downtrend in crude oil. Looking at gold futures right now, gold gapping up here. Could be a rollover gap here for this one as this thing kind of pushes to the upside here. You see a push into 2800 now based off of this rollover gap here. You also saw the previous day here was able to bounce back within this uptrending market, and we noted yesterday that this thing needs to start pushing through 2800 here. If it failed to kind of bounce out of this range, then we could have been headed back toward 2680, back toward the center of the range. But overall, this market continues to push the envelope to the upside here. You can see this kind of triangular pattern here. We see the breakout that has transpired, the hold, and the continuation to the upside. We're now testing prices at 2800. Today's high, 2802.80. That is recent highs. That is all-time highs. And if price can start to push through that level, we start to see further upside price discovery toward the 3,000 level here. So are we going to maintain the upward trajectory here, or do we see the larger development of this rectangular pattern? Again, the rectangular pattern goes from 2540 up to 2800. Any major rejection at this edge could bring us back toward the center of the range and across the range here as a larger rectangular pattern continues to develop here. So big time level here at 2800 right now, looking for bulls to take that out, or if we see a big rejection, that could be a near-term high that sends us back within the range below. Looking at the YM, right now the YM with a tiny range for the day, inside day, just 142 points of range. That is 27% of ADR. 27% of ADR, super narrow. You can see how tiny that is. Inside day at the moment. This market came just within striking distance of the all-time highs yesterday, very close to what happened here with the ES last week. And again, this is the zone where a rejection or reaction would occur. We have stretched tremendously to the upside over these last 3 weeks since this Monday rejection and thrust reversal low. Stretched it to the upside, pushed through the previous month's midpoint, and have gotten to the edge now. That's a huge move. And as you recall, to begin the year, especially in our monthly market outlook on January 7th, one thing we noted was we're looking for a push downward into the previous quarter's low, and if we can get a rejection there, we could be looking at an upside quarter to the upside. And as it turns out here, we came just shy of that low, barely missing out, and now we've come just shy of that high. So almost an outside quarter, but in essence, it's an inside quarter as of right now. So that move has transpired, but it just front ran our entry zone and just barely missed out on the top end of that range. But a great move nonetheless. Inside day as it builds out, again, ahead of Fed later today. Looking at Bitcoin, Bitcoin right now up 0.5% right now. This one continues to develop within a 20,000 point range from 90,000 to 110,000. It's also trading right around the center of that range here, which is the 100K level. So right there, that's your 20,000 point range. This is 100K right here in the middle, and we've seen this thing just kind of trade back and forth around this zone. Still kind of a modest short-term down move here, but hanging on to the 100K level. Failure to hold 100K and you open up the lower end of the range, and we could likely see that market bounce off the lower edge back up. So still developing within this range. Any pullback to sub 90,000 could be a tremendous opportunity to pick it back up again. We mentioned that before, and this market rallied 21,000 points from one extreme to the other. We're now building in this range at these highs. Inside day today, a double inside day from yesterday's inside day as well, so it's building energy for the next move, and it could be perhaps even lower, back toward 92 to 90,000, and that could offer an opportunity to pick this thing back up for its short-term swing. Looking at Ethereum, this one is about break even on the day. Yesterday turned out to be a high-ranging inside day. Today also an inside day as well, a more narrow range, 54% of average range right now, but very clearly keeping a bearish downtrend right now on a medium-term basis and a short-term basis here, keeping the downtrend. We're currently seeing price action below the key range low. It closed below the key range low yesterday, and that has been a tremendous area for bulls to defend so far. I have mentioned that any pricing below 3,000 tends to be rejected as of right now. But if we were to see 2,800 or especially 2,600, that could provide long-term entry zone for what could be a bounce back opportunity down the way. So this market's still working downward until it can find a strong low. Once it finds a strong low, that could be the heads up to be in for a reversal back to 3,400 and perhaps a bit beyond. All right, that is it for now. We'll see how this plays out heading into this afternoon's Fed and earnings out of Microsoft, Meta, and Tesla after the closing bell. Take care, and I will see you in the trading room.